in the state pension funds, the corporate pension funds, are in most cases also underfunded. The states have large deficits in some cases. I think a lot of pensioners are seriously concerned about this already now.
Hey, just to let you all know, we will be having another live stream on June 9th at 9 p.m. Eastern Standard Time to catch up with all of you and your opinions on gold, silver, current events, and the things our past guests had to say and what's your take on their opinions. Once again, we'll be doing a live stream on 9th of June at 9 p.m. Eastern Standard Time. Hope to see you there. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel and have not already done so, please do subscribe. Click on the bell to be notified on new updates. And if you like this video, please do give us a thumbs up. We appreciate your support. Without any further ado, our return guest today is Dr. Mark Faber, who is the editor and publisher of the Gloom, Boom, and Doom Report, which highlights on unusual investment opportunities. He is well known for his contrarian investment approach, and we are delighted to have him back here again as a guest. Good day, Dr. Faber, and welcome to SBTV. How are you doing?
I'm fine. Thank you very much. Thank you for having me on your program.
Thank you for coming back again. In a recent interview this year, Warren Buffett, he called the state of public pensions in the U.S. a disaster. And he also said he will avoid relocating or invest heavily in states that have large underfunded pension liabilities. Do you agree with his assessment of public pensions, and are public pensions today sustainable?
Well, they are in principle sustainable, provided the states increase the revenues of their pension funds. You understand? As it stands now, they are underfunded. What it means is they don't have enough money in the kitty to cover their liabilities, their future liabilities. They can continue to make payments for maybe another 10, 20 years, but obviously the longer the underfunded condition lasts, the worse it becomes. So either they have to cut benefits or they have to increase the contributions into the state pension funds, which may be difficult since the states have large deficits in some cases.
Alaska, Connecticut, California, Illinois, they have pretty substantial pension shortfalls. Is
Yes.
it? Yeah, they really do. And would it be logical to conclude that states with the most burdensome unfunded pension liabilities would be the ones most likely to radically raise taxes, or, as you said, find some sort of other revenue?
Yes, this has happened in some states already, like Illinois. And as you know, people are moving out of Illinois because of high taxation, partly high taxation in the form of property taxes. Then we have states like California that have also had to increase taxation. And so there are lots of Californians that also move out of California and either move to Texas, Arizona, or Florida.
Why would private investors want to build factories there that has to sit for, let's say, 30 to 40 years, and knowing that those governments will be coming after corporations as well for taxes? Wouldn't it discourage private investment?
Yes, in principle, yes. But as you know, as an example, there are a lot of tech investments in Silicon Valley and so forth. But maybe these investments lose money right from day number one. So it doesn't matter to them. And they may not survive for 10 years. So I don't know. But in principle, unless a company is given some tax advantages, like there is this famous case of Foxconn in Wisconsin, they got huge tax breaks, or Amazon would have received large tax breaks in New York City. If they don't get these tax breaks, yes, they will look at other locations to start up their business or to expand their business.
Right. Dr. Faber, what do you think will happen when the day comes that pensioners realize that they are never going to get their retirement money that they were promised? Well, what do you think
Well,
is going to happen?
well, I think a lot of pensioners are seriously concerned about this already now. And so, as you know, in a lot of state jobs like police and firemen and so forth, you can retire relatively early.
Yeah.
So let's say you retire at 55 or at 60. These people, they can find jobs. Some become Uber drivers, some limousine drivers, some become guards in homes and so forth. But most of them will have to find another job to essentially gain some security because they can't rely 100% on their, let's say, pensions. Moreover, they get the pensions, but who knows what money will be worth in 10 years, you understand?
Yeah.
We have large deficits. We have, as you brought up, these pension fund shortfalls, and they're not only to be found in the state pension funds. The corporate pension funds are in most cases also underfunded because the corporations, they didn't take enough money to make the contributions to the pension funds in order to boost their earnings.
Right.
So the whole system is in a deficit situation, which undoubtedly, and I repeat, undoubtedly, will necessitate sooner or later more money printing. And as a result of that, I think that the purchasing power of cash will go down, will diminish.
You think we're going to be looking at pitchforks and revolutions if it ever comes to that?
Well, it's a good question because the US always says, well, there'll be a revolution in Russia, there'll be a revolution in China, there'll be a revolution in Venezuela and, wherever. But it is conceivable that in the US, there will be huge social tensions in future. Now, I'm not so sure that people will go after each other with guns. You understand? It can happen also otherwise. But I think these tensions will arise because the young people, the millennials, and the Generation Z, they have no money. But they will be required to pay essentially for a growing elderly population through pensions and Social Security. I mean, Social Security is also underfunded. So how this will all play out, I don't know. But I can't see a favorable outcome. Yeah. And if I were dependent on a pension, and I receive a pension from the Swiss government, is the Social Security that we have, which is quite generous, but I don't depend on it, and I wouldn't be able to live from it. So it's a welcome small income, but I wouldn't be able to live from it. And for many people at my age, they cannot work anymore. It's physically not possible. I can do it because I can sit the whole day in a chair. But if you are in construction, say you are laying steel for concrete constructions and so forth, after 45, 50, you're done. Yeah. You can't work anymore. Or if you lay tiles on the floor, after like 50, at latest, your knees are gone.
Yeah. So when we hear people like Christine Lagarde back in I think 2014 when she says there's going to be a global reset, pensioners should they be taking that pretty seriously?
Yes, I think they should take it very seriously. But it's not only the pensioners that should take it seriously. I think asset holders, they own shares and they own bonds and so forth. Uh, we had marvelous years for financial assets since 1981, since equities and bonds basically bottomed out and started to rise. This isn't going to last forever. There'll be a period when stocks and bonds move sideways and where the returns are very low or negative.
Dr. Faber, are we at a point where many Western governments are really bankrupt if not for their ability to print money?
Well, I think this is an important point. I think they are basically bankrupt, yes. Most of them. There are a few exceptions, but most of them are over indebted. Their economies depend on further credit growth and money printing. And if that ever stops, the music stops, the party's over. So I'd be very concerned about this. But I'm not in a position that it's going to be over tomorrow. You understand?
Right.
When the bull market started for equities in 1982 and for bonds in 81, at the time, the dollar was strong. It had weakened. It had been very weak in the 70s, but in the 80s, it started to go up. And interest rates began to decline from over 15% in 81 on the 10 years, all the way down to 1.43% in 2016. Nobody expected that. But when this all started in 1981, the government debt also started to increase rapidly under the deficits of Mr. Reagan. Now, what happened then is that the strategists, and some of them were very good friends of mine, they said that these deficits would push interest rates up again. But interest rates at the time were still over 12%. But these strategists were already very concerned about the deficits that were occurring under Mr. Reagan. And this continued for the last 30 years. People have been concerned about the deficits. Yeah. And actually, just recently, Alice Rifkin died. She was an economist that gained some prominence under Reagan. And she was a deficit hawk. She was completely against any deficits, with which I have great sympathy. But nowadays, you understand, we have low inflation, we have huge government debts all over the world, we have huge deficits all over the world, and deficits no longer matter. The perception is that it's irrelevant. Now, as an economist, I'm asking myself, is it possible that actually we have low inflation and low growth around the world because of the deficits we already accumulated? You understand?
Yeah.
We have deficits in the government. We have deficits in the pension fund industry. Strictly speaking, we also have. They borrow money to buy cars and so forth. They spend more than they earn. They have practically no savings. Half the US has no savings. The rich people have a very high savings rate. If you earn $100 million a year, maybe you spend $5 million, but you already spend a lot if you spend $5 million. Yeah. So your savings rate is 95%.
Yeah. Geez, Dr. Faber, I'd love to be able to spend $5 million in a year. But
Well, if you have divorces and so forth, it happens quickly.
I hear you.
And if you have if you have a yacht and private planes, a private plane costs, say, around $2 million a year,
Yeah.
the maintenance.
Okay. But
I would advise you, if you have 5 million to spend a year, I can advise you how to do it easily.
okay. Well, okay. I'll have to visit you in Thailand, and I know we'll figure out a way to do that.
Yes.
Uh, uh, Dr. Faber, given the dire fiscal state of Western governments, as you just mentioned, do you think gold confiscations or expropriations by governments may increasingly become likely? I mean, given on the back where central banks have been buying up gold at record paces also.
Yes, I think this is a concern. I mean, I think that's also a selling point of people who want to own bitcoins and cryptocurrencies, that it would be more difficult to expropriate, say, a cryptocurrency than to expropriate gold. Say, gold, you own and you store it in your house,
Mhm.
or you store it in a bank, in a safe deposit box, or wherever, another depository. And the governments one day could declare gold ownership to be illegal. And what they would have to do is to say, uh, you need to tender your gold to the government, and the government will pay so and so much for your gold.
Yeah.
And if you choose not to give it to the government against this payment, uh, the penalty for not tendering your gold will be very high, say 10 years in jail, maximum security. You understand?
Yeah. Yeah.
And so they can essentially force people to surrender their gold. Now, I don't think that every government will do that.
Right.
But we've seen now with the US, if the US declares a country to be under embargo, they kind of force other countries to do the same. Now, recently, some other countries, notably the Europeans, do not agree with the US about these things, about these embargoes and so forth, and
Right.
about the US foreign policy. But knowing the central bankers, if one central banker decides to expropriate gold, say in the US, I think they would find a lot of sympathy in Europe to do the same. Because, as you say, the governments are bankrupt.
Yeah.
So if they can steal something from, and the gold holders are normally wealthy people, or they could say, well, each gold owner can hold, say, 10 ounces or 30 ounces or whatever it is. And above that, you must tender your gold.
Well, let's say if you have some gold and you realize that these things may be coming down the road, and you're looking for maybe a different country altogether or a different jurisdiction to perhaps hold your gold for you or your silver. What jurisdictions would you be looking at?
Well, I think that Hong Kong and Singapore are relatively safe, personally. I think Switzerland, we have uh, very well established property rights. And I think the argument in Switzerland would be, if gold is taken away from people, the argument would be, well, in this case, why don't you also take away paintings and other assets? You understand? It would be an unusual measure
Yeah.
to take away specifically gold and not other assets as well. But they can declare a wealth tax on all your assets, say 2% of your assets annually, and that you would have to pay on gold as well. You understand? That would make gold less attractive if you have to pay 2% per annum in addition to the storage charges.
Well, governments they'll always find a way to get into your pocket. Seems like that's their only job nowadays. Uh, but I
Yes,
read.
I mean, if it was to get into your pockets for the good of everybody, that would be one thing.
Yes.
But actually, the governments get into your pocket for their own benefit, not for the benefit of everybody. The governments in democracies, in my opinion, have long forgotten what their duty is, namely to represent all the people.
Yes.
They represent mostly themselves. It's a state within a state. Like the FBI is a state within the state. The CIA is a state within a state.
Some of us we don't have very deep pockets for Uncle Sam to be digging into, but I read recently that the average economic expansion cycle lasts for about 60 months. The current expansionary phase, which started back in June 2009, has lasted for more than
Yes.
110 months. It's about to become the longest economic cycle in history. Why do you think that a recessionary cycle has yet to befall the U.S. equity market?
Well, I mean, this is correct. We are in the longest expansion. I think by June or July, it will be the longest.
Yeah.
You know, they say the longest was, I think, between 1991 and year 2000. But I believe that the traditional business cycle has been changed somewhat because of monetary policies, the money printing. So you have a slowdown in the economy, they print money. But equally, I would say the expansion we have now is not only unusual because of its length, it's also unusual because of its weakness. This is an economic expansion where for the first time, essentially in maybe 100, 150 years of capitalism in the US, you have young people earning less than their parents and having less assets when they are 35 years old in real terms. This is unusual. In past expansions, each generation went up a step compared to their parents. This is now not the case. This generation is going down a step or two from the lifestyles their parents enjoyed. And, if you talk to parents, and I have many friends, they're like maybe in their 60s or 50s or 70s or whatnot, and you ask them, what are your children doing? And then they say, oh, he's a doctor or he's a whatever it is. And then you say, well, where do they live? And then they say, I don't know, Boston or Los Angeles. Then I say, are your children off your balance sheet or do you still support them? I'd say in 80% of the cases, the parents still support their children.
Wow.
Either they buy them in a condo, they pay the down payment for the condo and part of the interest, or they give them every month a few $100s or a few $1,000s or whatnot. But in 80% of the cases, the parents admit that they still support the children.
With the way things are going right now, what do you think the probability is of a recession coming on within the next 12 months?
I think the probability is very high. But you understand, the moment a recession is ahead of you or occurs, but the moment it becomes obvious to the Fed. And I have to say, personally, I think that the economy in the US peaked out somewhat somewhere around October of last year, September, October. And since then, it has been weakening. it's still growing vis-a-vis a year ago, but not by much. And some industries are in contraction. The car sales are in contraction. Car sales in Europe are in contraction, in China, which is unusual. And you have truck sales are in contraction. Freight volume is in contraction. So you have many sectors of the economy that are contracting. But the Fed can, of course, eventually cut interest rates to zero or below zero. How it will impact the economy, I'm not sure. Maybe it won't be favorable for the economy.
Okay.
Because the interest income of some people will diminish. And number two, we've had so many QEs already. So each incremental QE has a lesser impact. But let's assume they cut interest rates. Then, of course, the dollar will weaken, more likely weaken. And so maybe in nominal terms, stocks and real estate recovers or goes up, but maybe in real terms, inflation adjusted or measured against foreign currencies, they go down. So that's why I say people should own some gold. The expropriation of gold is not going to happen right away. You need a crisis. And between now and the crisis, I think that gold can probably rally a lot. But I admit it's not acting well. And the gold shares are performing, by and large, with few exceptions, horribly.
But sticking with the economy, do you think with the 2020 elections coming up, do you think the Fed is going to jump in and somehow tweak the economy to look rosy for voters?
Well, let's put it this way. The people at the Federal Reserve and on the board and voting members, I cannot imagine that they are very enthusiastic about Mr. Trump. They must think he's a complete idiot. And I don't think they will cut rates as quickly as the market thinks. I think they will be slow in cutting rates. So who knows what will happen? But my sense is that asset prices in the US, both real estate in the major centers like New York, Boston, Newport Beach, San Francisco, Los Angeles, Seattle, and Denver, that the real estate market is very toppy, very high, and will likely come down, and that stocks are very speculative and expensive relative to the rest of the world. So if you have a portfolio, I would consider increasing my holdings outside the US rather than in the US, and I would maintain some cash and also some bonds just in case the economy weakens considerably.
Okay. Last question. How about some crypto? I mean, I heard you bought your first Bitcoin recently. Congratulations. Do you see electronic currencies being solutions for future restrictions of gold movements, or something you may even want to keep in your portfolio?
I'd like to say this. I think, yes, I don't believe that in 50 years' time you will travel to Europe and then change your dollars at the bank counter into euros and so forth. I think, like in China, fintech has developed a lot. Everybody has electronic wallets. And there are restaurants you can't pay with cash. It's all electronic. It's bad for me because I pay cash. But this is the way it's moving. there are some security issues. You understand?
Yeah.
That is the difference between owning gold. Gold, if you store it in a safe deposit box, it's unlikely to be stolen. Maybe it can be stolen by your wife in case of a divorce or something like this. But basically, it's relatively safe. A crypto wallet, I tell you, a good hacker, if he can get into the US government, he can get into your wallet for sure.
Yeah.
You're an accomplished hacker. So there are some security issues. And I wouldn't put all my money into Bitcoins, and I wouldn't put all my money into gold, and I wouldn't put all my money into stocks. I would diversify. But I think, my young readers told me, Mark, don't be so old-fashioned. You also have to own some cryptocurrencies. So I said to myself, after the decline from 19,000, I think the low was around 3,100 in March, I said to myself, and looking at the chart, it looked like it's forming a bottom, a rounding bottom. I said to myself, so okay, let's buy some.
Yeah, even though crypto Bitcoin was stuck in low to mid 3,000s, it hung on. It didn't. That
Yes,
seemed to be the floor.
yes, but I didn't expect it to go up straight to 8,000. I have to say, I thought chart-wise it should retest around 6,000. But look, who knows? I think markets are unpredictable, but they're particularly unpredictable if they're manipulated by government officials. And, people have said, oh, the cryptocurrency markets are manipulated. Well, do you think the bond market is not manipulated? Do you think the stock market is not manipulated? Everything is manipulated nowadays.
Yes, it is. Dr. Faber, we appreciate your time, but before
Well,
we wrap up, can you let our listeners know more about the Gloom, Boom, and Doom report?
well, thank you for giving me the opportunity. I have two reports. I have a website report, and the printed version of a report is the Gloom, Boom, and Doom report. And the information is contained on gloomboomdoom.com. Gloomboomdoom.com.
Dr. Faber, we thank you for coming on the show, and it's been a pleasure speaking with you again. And I
Well, thank
guess
you.
no central bankers coming at your door this time. Your dogs are sleeping, huh?
Yes.
That was Dr. Mark Faber, the editor and publisher of the Gloom, Boom, and Doom Report. For more information of his work and his views, please visit his website, www.gloomboomdoom.com. Please remember to subscribe, hit the bell to be notified on updates, and give us a thumbs up. Do also check out the SBTV podcast on iTunes and Spotify.